Well, at a time when property, like all assets, is under pressure from the coronavirus, I'm talking to John Thomas, who's the chair of Msquared Capital, which is a company that basically links property to loans and to investment projects. And this is going to be very interesting to see how he thinks his business is being affected. JT, or John Thomas, good to see you.
Thanks, Peter.
So you've been around for a long time. I've known you for a long time. This coronavirus and how it's affecting business, what do you think's going on?
Well, I think I've lived through many crises, GFC, Y2K and others. This is all encapsulating. It's affecting our personal lives, it's affecting our business lives, it's affecting the way we live. And of course it's also affecting commerce. So we haven't seen something like this since about 1919 with the Spanish flu.
Yeah. Why don't you explain to people who are watching this program what Msquared Capital does, and you being the chair, we then can talk about the kind of risk management that you're obviously engaged with, hoping that this period is not going to be as long as some people are suggesting.
Peter, Msquared provides first mortgage finance to borrowers, and it links those with investors. At the moment, quality commercial first mortgage finance is paying investors returns of around 6.5, 7, which is quite incredible compared to what you might get on term deposits.
Yeah. But you've been around for a long time, and you know that some people think, well, I can get 6 or 7%, that's fantastic. That's what I used to get with a term deposit. But a lot of people don't realise that this kind of investment is not as secure as a term deposit because there's no government guarantee.
Yep, it's not a government guaranteed investment. However, you get the priority of a first ranking mortgage over the property, and we only lend to 65%.
Yeah, so that's what you do to inbuild lower risk.
Yes.
Ultimately, there's still risk, but you try to do it. Now, explain where the idea of the business came from, because obviously we've met the two Pauls, who are the founders in the past, but then you being the chair, you would have had an influence over what this business looks like. So why don't you actually tell us how the business actually operates?
I was approached by the Pauls because my background is running some of the biggest mortgage funds in the country. I've known both of them for a while, and they said to me, JT, is the time right? And I said yes, because of the arbitrage between term deposits and what you can get on quality mortgages. So we've set up a whole risk profile about the type of borrowers that we would lend to, how we would assess those borrowers, the type of properties we would lend upon, and how we would manage downturns in property and indeed borrowers not paying. And so the fund has been set up now for about 12 months and we have about $50 million in funds under management.
So therefore, if a borrower came to you and they had a property, say it was worth $10 million, you would be prepared to lend them at the very most 6.5 million, 65%?
We would, Peter, but if somebody had a $10 million property, I would consider that to be quite luxurious. We might reduce that LVR lower, but as a standard, yes, no more than 65%.
And what do these people usually use the money for?
Well, the good thing, and the Prime Minister's talking about this is small to medium enterprise borrowers. So they're borrowing money to enhance their business opportunities in a whole variety of businesses, and offering property as security. Quite often commercial property, industrial property and residential property.
Okay. Now, these people, obviously, like all businesses, are going to be threatened by the coronavirus. How are you guys in building the risk management of these borrowers because of the coronavirus?
Yep, a bit of luck and a bit of good management, Peter. We've only been going 12 months. We don't have any borrowers, thank goodness, who are directly impacted by the coronavirus. So nobody who runs a restaurant which has been closed, nobody that's in travel. Having said that, there are secondary issues to concern because of downturn. So all of our borrowers are meeting their obligations. If anybody got into difficulty, they'd approach us for hardship and we'd provide that. But at this stage, the underlying security, being the properties, are all holding their value well. And so if anybody did fall into arrears, we would manage them through that process.
Yeah. And I guess because there is the likelihood that the problems prevailing now are going to be relatively short-lived. Like, for example, we've heard the Prime Minister say in 6 months, most of this will be over. It may well be shorter, and I guess you'd be hoping shorter, so am I in my business. But at least there's a good chance that, okay, if you've gone through a rough patch for 6 months, there could be a fantastic 6 months after it as recovery kicks in.
Yes, my crystal ball isn't as shiny as I want, but I believe that we should be out of this isolation period in 3 or 6 months. China's out of it now. And I think that business will pick up very quickly, particularly retail and particularly financial services. So any downturn in terms of drop in sales, drop in property values, I think will be made up fairly quickly.
So when you're in a position of being a chairman of a company like this, and you're obviously sometimes have to be, hard-nosed with, the executives of the company, what are you telling the executives right now about how they should navigate the business through these tricky times?
The first thing, I guess, when you get a bit of grey hair, Peter, is to say to people, stay calm. And that might sound obvious, but so many people in a storm lose their nerve. So I'm saying to the Pauls, stay calm, let's look at each situation as it comes up. And if a borrower has a problem, we'll work through with it. Interestingly, we're still available to provide new credit, but obviously in this market with the knowledge of coronavirus, it probably sounds unfair, but we wouldn't lend to any borrower at the moment who was directly impacted by the virus. So our attention at the moment is to make sure that our investors are at all times aware of what we're doing, how we're managing the portfolio, and also we keep in touch with the borrowers. Now, at this point, that we do not have one borrower that's in arrears. A couple of them have called and said they're a little bit stressed financially, but they're on top of it.
Okay. And I guess the bottom line for you is that it's a matter of managing your portfolio of borrowers. But I guess at the moment, all lending institutions would be getting a bit of a challenge because people are not sure where they should put their money. How do you overcome that obstacle, or is it just going to be like a wait and see thing? Once the worst is behind, people will start looking at alternative investments more objectively?
Yeah, Peter, I think you've answered the question. In times like this, people lose confidence to various degrees. And there's always, whenever there's a crisis like this, a flight back, particularly in Australia, to our pillar banks, and you'd expect that. As I said before, I think if the crisis is over quickly, people will soon start to spend money, and in the financial services sector, start to look for alternate investments. Now, banks are a very important part of our structure, but with interest rates at an historical low, if you had some money to invest, you'd probably want more than 1% on it. Hence, I think that commercial mortgage funds will again become very attractive very quickly.
And I guess you being in the industry for a long time, everyone would love term deposits to be 5 or 6%. If they were, inflation would probably be 3 or 4%. But still, people like the idea of 5 or 6%. The bottom line for people like you and me who've been in the industry for a long time, when you start moving away from the absolute safe term deposits, it's then important to have diversification, isn't it? Rather than putting your eggs all in one basket, you have a group of alternative investments and try and spread the risk.
Yes. So we have exposure risk to individual borrowers, to property types, property location, sector type, so that, again, when we come out of this crisis, we'll make sure that the book is well diversified.
Okay. Some people have heard you talk about a mortgage fund, and they don't really understand how a mortgage fund works. So why don't you explain that?
A mortgage fund is simply collecting money from investors, putting that money together, and the investors saying, sir, we think you have probably a little bit more expertise than us. Can you go and find borrowers and properties which we could invest in, because yes, we want to take some money out of term deposits at 1% and potentially get a 6% return. So the fund manager is the middleman between investors and between locating and assessing good borrowers.
But lots of mortgage funds would actually invest in building projects that relate to mortgages. You guys have a twist on that, don't you really?
Yes, well we do. We mainly do take as security residential and industrial properties. We took a view when we set up the fund, although we had no knowledge what was coming, we have not at this stage and will not for a while do any construction loans. So if a borrower got into difficulty, we wouldn't have that added risk of potentially having a half-finished 14-storey building. All the properties we take a mortgage over are complete and are readily saleable. So that's a very deliberate strategy we've taken.
And you've also, and so in a sense, you're lending on other activities like
Yes.
hopefully a successful business, and the person who's borrowing it says, well, here's my $10 million house, I'll put that up as security.
Exactly. Exactly.
But you've also been discriminatory in terms of regions around Australia, and some of our friends in WA will be saying, why?
Why? I think, and when I ran a national fund, we lent money everywhere, but when you start again, you start small.
Yeah.
And my view is you always start in your own backyard and then you expand. So at the moment, we would look at loans in Sydney, Brisbane and Melbourne. As we get comfortable with that and we can settle some more loans, we would look to go further afield.
Yeah. So in a sense, the East Coast, you must think is an easier market to sell.
Yes.
I know the Adelaide market's always a bit slow, but
Yes.
it does rise. WA's had a rough spot after
Yes.
having a fantastic spot.
Yes.
So there's more security in the East
Yep.
Coast.
Yep, less volatile. And Perth's a great place. I've visited there often, Peter. But when it's booming, and when it's busting, it's busting.
Okay. Is there anything else you'd like to tell someone who is interested in Msquared Capital?
Give us a call and we'll talk to you about the opportunities that are available, but more importantly, how we manage the risk. Because at the end of the day, when somebody gives you their money, they want to get it back.
Yeah.
And we are happy to sit down and tell people how we mitigate all risks, including, if this was 4 months ago, nobody knew about coronavirus, but the risks that we have built in are protecting our investors at the moment.
John Thomas, thanks for joining us.
My pleasure, Peter.
That's John Thomas, Chairman of Msquared Capital.